Welcome back to the channel. I just want to do a quick recap of what happened last week and my predictions came to fruition because not that I know the future of the market, but because I follow the trend. And always, the trend is your friend for short-term investors, but for long-term investors, you don't care what happened in the market because you're here for a long time. But welcome back to the channel. Please like and subscribe. And if you think that I have earned your thumbs up, please. If you think that I have earned your time, that I have managed this channel better than expected, please like and subscribe to the channel. Let's go right into it. So for next week, I have quite amount of stock that I want to break down that I think potentially in 2025 these stock is about to take off. I look at them as my mid cap stock that I think they're relatively cheap and they will take off. I'm going to show you example of what I'm talking about, but let's do a quick recap of what happened last week. So I drew this line and I said over and over, guys, that 10-year treasury yield continues to rise because of what's going on in the market. And also we have a huge rally. This happened right around when the president was selected for next year. And what happened is that the market took into consideration and the market pulled right on back Friday, giving up. Again, this was predicted of 500 points to 600 points, and we hit that mark as you can see right here. Nasdaq pulled back 2.42% and was down 500 points. So we gave all of that up. Why? Because the market rallied that we have a new president. And of course, again, I said, hey, we're at an all-time high. Normally what happened, as you can see previously happened, market pushed up, got rejected at all-time high, corrected itself. Black Monday took a part in this back in August, and then market found itself back because the interest rate was cutting. So of course, better interest rate, more money is available to the market. So market pushed up. And again, here comes the president election. Market pushed up for no reason. So we gave all of that up. And now next week, I'm not surprised if we continue to have a red week because again, what's contributing to all of this is nothing other than our 10-year treasury yield. Once 10-year treasury yield continues to rise, the market is going to take it into perspection and then it's going to continue to fall until this number right here significantly trimmed down back to 2%, 3%, or even 2 point something there, 3 point lower, market is going to continue to get red and red and red. Why? Because again, the Fed contributing to this, saying that there won't be as much interest rate cut coming next year because we're already gone 75 points already. So let's get into breaking down some stocks that I see potential upward trend in coming next year. And why do I see potential in these stocks? Because I consider them to be as mid cap stock. So the first one is RKLB, which is Rocket Lab. As you can see, it's up tremendously. And let's go over here. So Rocket Lab, where's Rocket Lab? I have it right here. Tinker symbol is RKLB, and the money they have, which is their market cap, is 6.5. So with small cap stock, I look for a $2 billion or upward to $10 billion. I consider these stocks as small cap stocks. And as you can see, Rocket Lab is industrial. Of course, the name said it all. They make rockets. As you can see, for the last, let's see, for the last 1 year, the stock has been doing tremendously well from $3. If you had bought this back in April when it was selling at $3 a share, now the stock is worth $19. And I still see, so with my move for this stock is I will watch this stock and see when they pull back to around $14, then I will look to get some shares. Why? Because again, on the run, guys, as you can see, it tend to find support at our moving exponential line. And even though the market pulled back 500% Friday, what the stock did, the stock was up 9%. So it wasn't even paying attention what Nasdaq is doing. This company is here to make money. As you can see, previous earnings, they had actual, so expected was 0.1 cents, and they actually came in with 1 cent. So -1 cent. So next time around, they can report better earnings with more money invested by investors, and then we can see the stock move to the moon. So again, these are stocks that I think for next year, I think they're gonna do tremendously well. As you can see, previously they were trading below $7, below $3. Low was $3.47. If you had gotten in April, guys, you would have been up tremendously on your return. So why I like these stocks, because from IPO, normally when a company launched their IPO, guys, let's look at it from 10 years ago. Normally, when a company launch their IPO, stock bottom out until they bottom out, consolidate, and once they find their ground, then they start moving upwards. You can do your own due diligence and see that most of these stocks does the same thing. So back in 2001, this stock was trading at $21 prior, and now, as you can see, it made a new high over $22.51. So again, these are stocks that I like to invest in. Why? Because they tend to offer a good insight when they're moving up, they're moving up. No matter what market is doing, these stocks tend to go higher. All right, let's break down the next one. Tinker symbol, I think it's HIM, HIMS, which is HIMS. They're in consumer defense. So as you can see, defensive consumer market cap is $5.1 billion, and this stock is taking off. It's the second time for the week that it's coming across my channel. And as you can see, prior to this, back in 2021, the stock was trading at a high of $25. Most likely they had their debut. IPO came out. This is when they first offered to the public that, hey, I'm selling shares to the public. Investors can come on board. And what happened again? They pushed up as expected, consolidated, and then from there they're finding their way up. But as you can see, this is a sweet opportunity. Why? Because look right here, what happened? Previously pushed up, got rejected at our moving at our simple moving average, and notice what happened, guys. Rejection was at $13, and then it pushed up to a new high, and look what happened. Got rejected again, but did it make an did we went back down to $13? No. Look where the rejection came at, $19.32. So we call this a higher low. So when a stock is making a higher low, chances are it can go up again and pass $3.44. So this is, excuse me, this is something you want to pay attention to. Why? Because it's a strong potential buy for this stock, and I think it will do great coming next year, coming the next couple of years. Again, if you had bought this stock back in February, guys, if you had bought this in February, you would have paid $9 for it. So you would have been up $10.32 currently on your shares. That's a lot. So these are stocks again that I see a lot of potential in, and I will set my alert for this stock right here because I want to know when it pulls back here. So therefore I can start get some shares in, so when it's on the rise again, I can benefit tremendously from it. So let's break the next one down, which is Tinker symbol, which is RELY. So this is a great one. Why I think so? From it make it debut at $53 a share, it got again going through its consolidation phase, which is expected, pushed up, got rejected at $27. Now it's currently trading at $19, and it pushed up, as you can see, overextended on my RSI, overextended on my MACD, and now it's trying to find its way back up. What happened since then? If you notice, you can see that we were trading negatively below our 200-day moving average, and now we pass our moving average. Not just pass our moving average, we're trading above our moving exponential line. So this is something you want to pay attention to as well. So, and what's our next one, which is Tinker symbol RIOT. This I love it as well. As you can see, it was trading at our IPO came out trading at $79 a share, and it took the company. This was from, let's see, from 2021, 3 years, consolidated for 3 years, and now it seems like it's about to take off again. So previous high, other than IPO initial earning, initial debut, we have a top line, which is a rejection at $21.35. So that's something you want to keep in perspective, because it did it previously, pushed up, got rejected, and traded lower. Company figure out what they're doing, and more investor came on board, and now I think this is a definitely buy out of all of the company that I just break down. I think this platform, it's a financial service. So I think it's a definitely buy for me, because next time you might see this stock, it might be at $21 or so forth. And we don't want to be out when we don't want to get left out when most of these stocks are rallying. So let's go over to one stock that was previously in this predicament, and they have found their way through beating earnings back to back. So initially, SoFi SoFi IPO came out, and they offer at $28.26. Of course, as they all do, got rejected, traded below our 200-day, then find their way up and down, up and down, up and down, and now the stock has returned. As you can see, Friday again, Nasdaq pulled back over 500 points, and look what the stock did. Found its support at low $13, and now it's on its way to a new high. So previously the stock was trading at 14.48, pulled back Friday, which is, I'm happy to see that it did not make a new low comparing to most companies, because of the 500 points pullback. And now look what the stock is doing it. So next week, we not to should say next year, it won't be a surprise to me if SoFi is trading at $25 a share, because guess what? The stock has been killing it. A lot of people, the companies out there, it's all over, they're performing well, they're beating expectation, and it won't be a surprise to me if it continues to go well and higher, like this company that I missed out on, which is Cava. Earlier this year, guys, if you had bought Cava at, let's see, January, Cava, this company was trading at $44 earlier this year, and look what happened. The stock just continued to rally, keep rallying, keep making new highs. This was trading at last year, October, was trading at $29 a share, $29 a share. And look what happened. The company took off, beating earnings, as you can see right here, back to back. Earnings was beat, guys. So right now, this is definitely a buy for me. But the reason why I don't get into it, because I missed the rally. And I'm not sure if this will find support back at 128, and I don't want to be on the downside. So I prefer to buy the smaller cap. Again, this company was trading lower before, and again, as they get to know the market more and more investors know about them, then they start to inject more cash. And look at this stock rally. So these are prime example of all of those stock that I just break down, and what potential they have in the market, and what how can they influence your portfolio on growing. Mid cap stock is the way to go next year. So again, guys, please like and subscribe to this channel, and let's grow your portfolio together. Until then, stay green in the market. Stay tuned for more.